What's going on, guys? It's Kyle. Welcome to the Stocko YouTube channel. Today's video, we're going to be covering the overall market. We will also be covering the Sofi stock. A big reason why I wasn't filming these past couple of days is because I wanted to get by all of these massive mega cap earnings because, the stock market has been pricing in a lot of fear. We sold off 4% the other day on the NASDAQ before the earnings even got released. So there's a lot of algorithm trading, a lot of fear, and I just wanted to get by these mega cap earnings. And now that these earnings have come out, I want to tell you guys, they are pretty solid. The economy is in, good strength for technology stocks. So it's looking pretty good as we approach SoFi's earnings in the next couple of weeks. If you enjoy this video, be sure to subscribe to the channel. We will be keeping you updated daily on all of the breaking news. Be sure to smash the like button and don't forget to drop a comment. Let's get into it. All right, guys, as you can see, we got, the largest American companies by market capitalization, the top 7: Apple, Microsoft, Google, Amazon, Tesla, Berkshire, and Facebook. And basically, we got about 2 left. Okay, so the great news is we got by 5 of these earnings, and they were pretty much all solid. Okay, I believe the only one that has sold off so far was Google. So everything else has done very solid. Facebook did solid today. Tesla did solid last week. Microsoft did solid the other day, and Google was decent. So 2 left. We just need to get by Apple and Amazon. And then I believe, if these companies show strong earnings, I believe, that could be the bottom, for the fintech growth sector. And we can finally get into a reversal into the second half of the year. As we can see, we just continue to hit new low after new low. This has also been happening with many other companies that have just continued to sell off. I believe, Robinhood is back to new all-time lows. Affirm, Upstart, these companies just continue to sell off, with this, massive correction we've had in tech, specifically that NASDAQ once again. So we've been hitting about, low sixes. I believe we hit 609. We're up in the after hours because, these companies, these mega caps are reporting strong earnings. That's what we're going to look at today's video. We can see here Facebook parent Meta jumps 13% as Q1 profits and daily users top views. We'll take a quick look. We can see it's been beat up for the past, couple of months down to, 174. But guys, they're up 15% in the after hours, bouncing back strong. So finally, they bounced back after that nasty correction from I don't even know how high, 350, 400 or something like that. We also have PayPal, non-GAAP EPS of 88 cents in line, revenue of 6.5 billion, beats by 90 million, so some decent beats. We have PayPal up about 5% in the after hours. This stock has literally hit all-time lows as well. So basically every stock I'm going to talk about has hit all-time lows, okay? Facebook, PayPal, Lenny Club, Meta, Pinterest, all of these companies have hit all-time lows this past week with this nasty correction in the NASDAQ, guys. 22% correction is bigger than 2018 is what you need to realize. Pinterest pops as Q1 revenue beats expectations. So even Pinterest, guys, look at this stock, up 7% in the after hours. This stock was literally $81 and sold all the way off to $18. New all-time low this week, just like every other company, guys. But as you can see, these companies are putting up solid earnings, okay? The world is not ending. There is just a lot of fear being priced in because, the Fed is going to be hiking rates pretty fast. They've already started hiking rates, but we got a big one heading our way with a 50-point base rate hike, the next week or two. But if we look, guys, we have a really bad miss with Teladoc Health, EPS of negative $41, revenue of $565 million. If we take a look at the stock is down 33% after hours. This is one of Kathy Wood's, largest holdings. I believe it's like a top 10 holding. I mean, this stock was at, over $300, I believe, at one point or something like that. So they're down another 33%. I haven't really looked into the earnings, but you can see that is one of the misses today. So guys, there's one more we're going to look at, which is Lenny Club, which is, a big competitor to SoFi. But as you can see, it's just a smaller company, and Seeking Alpha does not post, usually companies with, 1 to 2 billion market caps, on here. So we just got to look at it for ourselves. And you can see Lenny Club is the biggest winner after hours, guys, up 20% after hours. Literally, the stock jumped from 13 to over 16 and a half after hours. So we're going to take a look at those earnings, and I actually want to look at the report with you guys. So we can see here we got the Q1 2022 results. We can see here award-winning member-focused digital marketplace bank. They now have 4 million members, originations of over 70 billion, The vision is to become America's financial health club. So guys, Lending Club is on fire. Q1 2022 highlights exceeded all targets. Net revenue 255 to 265 estimate. They blew it out, guys. Look at that. They blew the top end out by 25 million. Almost 290 million in revenue. Net income was 25 to 30 million. They beat the net income top end by $10 million. So guys, this is a record GAAP net income of 40% quarter over quarter and 87.9 million year over year, driven by revenue growth and strong operating leverage through expense management. So guys, their bank charter has turned them profitable faster than you could believe. I mean, they got this thing, I believe, 9 months ago. Net revenue is up 174% year over year. GAAP net income 41 million. So guys, this is like the third quarter that Lending Club has had with their bank charter. I mean, look at these numbers. Net interest income 100 million. Deposits are up 68%. Net interest margin 8.6%. This is absolutely insane, guys. This is insane for a first quarter into the new year. I mean, they could be killing it by the end of the year, guys. So as you can see, new vertically integrated marketplace bank model drives superior performance versus pure marketplace model. That bank charter that they got, guys, is ridiculous. I cannot tell you, how excited I am to finally see Sofi's, bank charter start to kick in. You're not going to see it on this earnings. It's going to kick in for your next quarter, Q2, okay? And we're in Q2 right now, which is April, May, and June. So Lending Club, after 9 months, guys, they are on fire, and that is why this stock is absolutely flying after ours, guys, on strong earnings. Top line growth driven by recurring net interest income stream combined with strong marketplace. So the reason why I'm not looking at these other companies like, Meta, PayPal, etc., is because Lending Club is, a direct competitor. They are, doing, personal loans just like us. I don't know if they do mortgages. I need to look into that. But guys, this is insane. Lending is on fire right now, as you can see. I mean, look at this. Net interest income, 439% year over year growth, reflects average loan growth of 65%. I mean, you could just go through these earnings, guys. I really hope SoFi has a blowout like this, but I'm going to look through this more and probably, put it in another video. But guys, I mean, they are on fire. Now, going back to the NASDAQ, guys, I want you to look at that 1 year chart, guys. Take a look at this. If we click the top of the NASDAQ from the peak, we have corrected 22%. I believe it did hit about negative 23% correction. I mean, that is a bigger correction than 2018. So a 23% correction, a lot of that, air balloon, bubble money has definitely come out. You're talking 1/4 of the NASDAQ has been evaporated, basically. So guys, this is a great time to be buying technology, fintech, etc. I've been trying to buy every 2 weeks or so on a Friday. So right now I'm not selling. I'm not really buying. I'm going to wait till next week for more of these earnings to kick in. So that's what I personally been doing. I'm not buying or selling. This week I've just been holding, okay? And I haven't sold any of my shares, okay? I have shares, in one account that is over $17 and then another account with a much lower average of like, 10 to 11. So I have, a much higher cost basis for people asking, okay? I started buying the stock like over, it seems like 8 months ago when it was over 20. So I had to average down from 20. So as you can see, guys, I am definitely very, very deep in the red, but, it's okay to be down, 50%. It really doesn't matter, okay? You just need to have a longer term mindset and understand that, the NASDAQ will eventually correct and there will be a rotation back into a growth eventually.